Hello, everybody, and welcome to the Plus3 Futures and Commodities Midweek Show. On today's show, we are going to do speed round covering all the markets, what's happened first 2 days of this week, what we can expect for the rest of the week, and what are the most critical levels we need to watch. My name is Ben Maldonado. As always, I'm here with Barry Hederachi. And Barry, let's jump in. We got a half an hour to cover everything. Let's do it.
All right. And if you guys need to catch up, please watch the episode from last Friday. You took time and went into a lot of these other, few different markets in depth. So catch that to get the rest of the info. Here, we're looking at the cash. And where we left off was how we were up exactly 45 degrees. And we're sitting just basically bumping against it 57.50, 57.52, this area right there where the dashed line is 50% of the square. And isn't that interesting, Ben? We came up. I mean, we had three levels kind of sort of stuck together here from 73 to 57.50.
Yeah.
And soon as price entered that zone, look at that. All we did was just
Trapped.
churn, right?
Yeah.
Got stuck in there.
Yeah. Yep.
And now we have to look at, what can happen from here. Okay, really quickly. It's very easy. This is the perfect area to do a false break. That's the first thing we have to keep in mind. If price breaks above this level and can't hold above, that could signal the, sort of the initial stage of a false break. So we got to keep that in mind. Second thing is, even though this is the last low and swing low, and we're looking at that measurement, which is 45 degrees, and that's great. You also want to go to see where the entire leg got started before the ABCD leg started to form. ABCD leg started to form. And from there, if you go 90 degrees up, we come up to right about 48.58. That's the level that we come up to right there.
Yep. 58.48. Yep.
So it wouldn't be out of the question to see the market break out and tap 90, because that would just be classic, right? These are the two things to watch, and that's what makes this level so important. So let's keep that in mind, and let's switch. And so this is the cash chart. Those are the cash levels. You guys can stop the screen and figure out the levels. And we had a question about 90 degrees and 90s and where they are. So every screen when we start, we have this. You can stop the screen and look where the 90s line up. This early part of November here, and the 90 degrees up. Normally
we'll call out price.
Yeah, we call it out, and we also put the prices down so you can track it that way. Now I'm going to jump to the futures contract. This is the December futures, just to show you it's the same basic setup, right? I'm putting the square at the August low, and here we're stuck at 7/8.
7/8. Yep.
It's almost like at the start line, and here's the finish line.
Right.
Does it look like it? I mean,
yeah, like they're lining up to go.
And that's 58.92 is the 90 degrees up from that low. And that would definitely, 90-degree moves definitely have the power to finish up legs. So we have to watch that. And the other thing is,
Barry, if we do it in the next day or two, it's also right near the 45. Timing wise,
it's less, 45 to 49 is sort of the death zone that Gann talked about.
Yep.
So we definitely have a few more days, and which would bring us into Friday and maybe even Monday. And we have a lot of news coming out between now and then. So totally possible. And if we move it to that place where we saw the 45 degrees in the cash, look at that. Exactly the same 45, not the same price, but it's 45 degrees up from that low, September low. Going up into here, but the September highs are still intact, so that's really the thing to watch. If can these hold, or there's only a couple of things. Either we're going to hold these false break, or we're going to get on top of it. If we get on top of it, this 58.92 is really the level to watch, because we want to see what
how
happens.
we have at that 90. Yeah.
And just to quickly touch on the Dow, you can see Dow is not that enthusiastic. It's kind of curving down. We started to make lower lows, if you noticed, right? 216 degrees up. Not much. It's looking a little weak, but so getting back to the full contract, again, I think we talked about all the prices, so you guys know where all those things are. Is there anything you want to add, Ben?
Just that we're in these time cycle windows this week, so we're really vigilantly watching how price acts and what we're doing here.
Yeah, this time windows are really important. So we definitely have to watch those.
Hmm.
And this is a 30-minute. And Ben was, we were talking earlier before we decided to record, and he's like, "What do we have to talk about?" I mean, look at that. The
I
entire
know.
month has been range bound. But the important thing to watch here, the pattern that's developing is you got to really watch this 57.20. You can see how that was tested multiple times. And
Hmm.
if this thing gets taken out before we get settled on top of 58.14, it could be very negative. So keep
It
that
could
as a
be game
marker.
over, yeah, with
Yeah.
this
So
uptrend. Yeah.
that this level becomes really important. And the other thing, so the canary in the coal mine here is the 57.67 level. We want to see if we can, if we get under it and somehow can't get above and starts to fade 57.40, that's also a sign of trouble. A sign of no trouble would be to get on top of 58.14 and really establish, some price action above that. Okay.
And as it relates to the other charts, that would mean we're going for that 58.92.
Exactly. So that
Yep.
means we're going to hit for the 90, and that's
Yep.
that.
Head for the 90. Yep.
All right. Just wanted to look at this chart for a second. And this is the continuation chart, ES.
Hmm.
And coming off the October low, October of 2022, using a square of 72.
That's
Looking,
nice.
yeah. And now, we guys saw the 45s and the 90 a little bit above and all of that using the square of 90 up in this area. But if you take it from the, October low, we're at 288 degrees, and we're just, it just looks like it's stalled, doesn't it, Ben? I mean,
It
it's just
sure does.
got in there and that's it. And far as the 504 is concerned, we basically squared out and we're just hanging
Hmm.
around there. And I'm just curious to see, again, this is the level we want to see if we can get above or not. So if we're going to get above, this ends up being about 58.05, we
Hmm.
cleanly need to get above that. I
Yep.
just want to show that before we moved on, just because we don't get to 288 degrees from a huge major low like the October low that often.
No.
I wanted to touch on that really quick. All right, getting back on track. Bonds. Remember, Ben, you brought up this ABCD last
Yeah. On
Friday,
Friday. Yeah.
and we talked about how if prices go through that, then it's highly likely it's going to go lower, at least to test the level here around 120 and a half, if not
Hmm.
119 and a half down here, and 45 coming down to 45 would be a perfectly normal test, because we had a lot of time cycles expiring here, and it looks like bonds are well on the
Rolling
way.
over. Yep.
Yeah, rolling over, and it looks like from here we got to really watch the counter trends. Next
Mhm.
thing would be really action packed. the
Yeah. Crude's been moving.
crude's been the one to watch this week, and you can see we found support. 60-degree square. We called that out. We were looking for a higher low that came in. We were looking for 73.50 to be the first level of resistance. If it got above, we were looking for 59.50 to tag that. And we got pretty close. We got very close to tagging 79, and under the conditions with all the news and things, that's not bad. But what is bad is for the bulls would be this big outside reversal.
Hmm.
And we didn't quite get under 73.50, but boy, it's very
It
close.
pushed. Yep.
So I would say, sure, because of all the noise that's also in the air, if we can,
72, huh?
yeah, I would say 72 and a quarter or so. If we can
Hmm.
hold above that, I would say it's still bullish. So 72 and a quarter, ideally 73 and a half.
Hmm.
It's bullish. So unless it gets below that, I think I would say crude oil is still kind of primed, and it could go any
Hmm.
minute. But unless if we settle below this, then, all right, we're back to normal, and there's no big problem in the future, right? In the near future, anyway.
That's right.
So 72 and a quarter to 73.50 is the level we want to watch. And gold, look at that, Ben.
Yep. Starting to pull back a little.
Mhm. We found this resistance, very early. I mean, before even price got there, which is 216 degrees up from the October low. Sure enough, we got up in there, and with price and time squared. So we were looking for some kind of a correction. We even said, even coming down to 50% would be a 50% correction, 50% of the square down to
Hmm.
25.50 would be perfectly normal and very bullish correction. And we were surprised how tight it was holding on here, right? And
Hmm.
it was just starting to build a little triangle, and we broke the downside. We're at a quarter of the square. let's see. And the quarter held like you can see how well it held, right, Ben?
Yeah, very
Bounced right off
nicely.
of it.
Hmm.
Let's see if we can hold above it or not. It doesn't feel like the correction is finished yet, but this is a marker. So I mean that it was a big bar. So let's watch what happens here and monitor it. Next level down for support would be the 1/3. That's around 25.97.
Hmm.
Okay, that's the gold. And I know you're going to cover silver,
I'm gonna
especially the
do all.
long
I'm gonna
term.
do something different. I'm gonna do all the monthlies
Yeah,
on
which would
these
be, I
ones.
think this is the perfect time to do that. We're coming
Yep.
towards the end of the year, fourth quarter. It's a good time to look at the long term view.
Hmm.
And we used to do those every month almost, right?
Yeah.
All right. So copper, you're going to cover copper monthly. So
Yep.
here, ideally, it would have been, we talked about on Friday, we want to see it hold above 454. Fine, given the situation, given, the entire China push, you can see how it faded here first before
Yep.
it, you
Yep.
know, the copper people are not stupid, man. They are early in the game. You can see how it faded here. And here's the false break,
There it
against
is.
that.
Yep.
So copper gave an early sign, but anyway, being above that would have been bullish still, and it would have, and this triangle would have broken to the upside. What happened was it corrected to the downside. Here, we're looking. I mean, even all the way down. I mean, big support is around 430,
Hmm.
so I'm expecting it to hold. Worst case, maybe this support level down here that we 425 or so, but that's a level to watch. And now, until we can get above this 54 becomes resistance, right? So we'll
Hmm.
have to watch it. Next, we have the dollar. Again, another, strong mover. We came out for our support, which was, we had two support levels, 0.5 and 99.50. And we held pretty much in that zone and rallied. So we will look now, we basically cleared that entire bottoming process, right, Ben? So
Hmm.
now we're right up against 50%. If we go, we would definitely need to clear that. And looks like whoever was buying dollars finished buying dollars or taking a little break. Some kind of news is out. You can see how between the copper and all of these things, how markets are behaving, right?
Exactly. And I was going to
And
say the weakness in the gold and copper and silver is, I think, directly dollar related.
exactly. So 102.77 is the level, 50% level. And you can see we stalled here on the way down. So that's resistance for now. So we have to see it might consolidate above that, which would be kind of bullish because this is all becomes a floor. And if we get on top, then I think we can go on and test the old highs back in April. And that's all let's talk about the Hang
Hang
Seng for a
Seng, man. Look at
second.
that.
Look at that, man.
I hope people can appreciate how fantastic that was in terms of a chart and a call. And then look at the timing, man.
Mm,
I mean, right on the vertical thick red line.
yeah.
What is that, 504?
504, man. It's very
Mm-hmm.
important. It's a
Mm-hmm.
seven squares out. Very important count.
Mm-hmm.
All right. So Friday we talked about the 22,709. Let's call it 22,710 area to be resistance. And if we go further out, and I drew this line on Friday saying, hey, we could, by the time when we were drawing the line, market was down here. So
Sure.
uh, that would be the resistance. And ideally, if we get to the 144, might as well go up there and finish it up. Was
Mm-hmm.
a talk, and we talked about this being a potential
False break.
false break. And sure enough, we got that, on Monday, and here we are crashing down. It's a hell of this is what an ideal false break should look like, big hype ramp up and then just cut the cord. All right. So what happens from here? A lot of speculation. We're just going to stick by the charts. So 2380 is our level. If the market can hold above this, I think,
It's
I mean,
bullish.
clearly the lows are in place. Now we're just trying to figure out where's the value, right?
Mm-hmm.
So if we can hold above 2380, I think Hang Seng's really clearly in super good position, especially considering all this structural support back here. But I fall back to our old number, which is 19,450. If we can hold above this zone, 450, 19,450, even with some kind of a correction, it's still very bullish. The most important thing is the low is in place. Coming down to here will be just a 50% correction, which is the place Gann said to buy everything, So
Mm-hmm. Right.
so
That's true.
50% correction would be perfectly normal. The key thing is that, I think we have the lows in place. So
Mhm.
that's all I have. Other than I have a couple of user requested charts.
Uranium you were going to do, right?
Yep, yep. Let me just point to the end because we nailed this thing. We call this out to be the low because of just how price moved through the squares, right? We had the
Hmm.
135 by 90,
Hmm.
and we came down 45 degrees by 90, and that was a low. Got the higher low, and we were looking for it to rally a bit. Now, ideally, the next resistance is up around 151 and a half. So we'll leave it at that. Of course, we can correct and whatnot. We're way above the 1 by 1 here. So
Hmm.
the dollar is very strong. So let's see what happens. But that's what that is. Next, let's look at the uranium. You're right. Look at that. Out of nowhere. Right? I mean, that's look at that. So when we started talking about uranium, we were at this, we were coming off this 50% of the square, 135 degrees up from this low. And we were just looking for higher prices. And sure enough, a few
There you
days
go.
later,
Hmm.
we even took out the 180 degrees. So that's very strong and a little suspicious because the high came in quarter square into the next square, the full
Hmm.
square. Let's see what happens. Obviously, I mean, like Ben always said, basically, if we can hold about $50, then
We're in business. Yep.
yeah, we're in business. Uranium's got a lot more to go. Correction is basically done. I think that's all I have. Let me see. Well, you're going to look at the monthly bonds, yeah?
Yep. I'll look at monthly
Okay.
bonds.
So it's a 10-year, and we had the. I mean, it would have been ideal if it went up to 90 and
Hmm.
squared out, or at least got to 90 to finish off the leg. It didn't quite have the power to do that. And when that happened, so we got to three-quarters of the square,
Hmm.
and we also broke the trend line. I mean, that was the reason the trend line was in place, broke it perfectly, and as soon as it broke, and we even got below the 50%
Yeah. Now we're under the half square there.
coming off the April low. So it looks like that run just ran out of gas, kind of like the Hang Seng, but maybe not so quickly. It just
All right.
you can see
Right.
it kind of petered out, right? So if we go
Yeah,
out to
for
the
sure.
October low, you can see clearly 111 is really the support.
Hmm.
So let's see how that works out. So the upside is done, and resistance for the 10-year would be around 113, 114. Yeah, let's say 114. That way it's nice and clear. That's all I got. That's a fast round,
Awesome.
man. I hope you guys were able to keep
Speed
up.
round.
That's a speed round. So let's look at the
Uh,
monthlies and see where we stand. And Ben, maybe you can talk about the important cycles that are coming up in the next few days. Like that's really what we want to kind of focus on this week and look at the
sure.
monthlies to kind of see what can happen if we turn in here. And if you
Yep.
guys like our work, like the video, please, click the likes and share and subscribe. And thanks for all the comments. Let me put it back to you, Ben.
All right. Thanks. So as Barry said, we're going to take a fast move around the bigger picture, bigger time frames in some of the markets he covered and some of the ones that are moving. Let's start with the dollar. And this one's interesting, Barry, because I was doing some time measurements. This recent low
Mm-hmm.
from this
45,
low in 20 gave us 45 months.
low to low.
Yep. We completed this little ABCD and we already, for the month, we already have an up bar here. So,
Right. Took out last
um,
month's high. Yeah.
yeah, so I think dollar strength is probably something we're going to see, for the next month or so.
Mm-hmm.
Maybe not straight up, but it's the monthly is sort of corroborating what you're showing on the daily, which is, it looks like the dollar has some room to run. If we get up to the full square, you're talking about 107,
Right.
and that would be 72. I mean, and if you look at the legs, you could say here's one leg, here's two leg, and this is the third leg.
Mm-hmm.
So there could be one more push up in the dollar. That's what the monthly is telling us. And this 45 low to low is a valid relationship. So w-
And Ben, the other thing I noticed here is, that triangle breaking to the downside could have been a false break, right? Obviously, it looks like it right now.
absolutely. Yep.
And if it was, then that was it. Then we're going to blow to the upside. So we'll have to watch that closely, see if
Yeah.
that's
So
true.
we need to watch and see if if we keep pushing up on the lower time frames, it's gonna translate into here. in the bigger time frame and give us, a better sort of timing on when we can see this 107 if we're going to keep pushing there,
Mhm.
which is quite possible.
Yeah.
All right, let's go to the monthly in bonds. And here's sort of the opposite view of the dollar, right?
Mhm.
We had this big downtrend, found the low, really nice measured moves here, that
Mhm. Yep.
helped us, in addition to the half square, helped us sort of nail that low. We
Mhm.
were, we were working on an ABCD up, but now we've got this turn down here, right? It's the monthly. We're already lower than we were last month. So the monthly as of now, it's early, but as of now, we've got a down bar, and it just looks like the up move may have stalled here and petered out.
Mhm.
I mean, we basically, low to high it looks like it's about a 22 here.
I mean, we reversed off your 90 back in 23, right? I mean, as soon as
Hmm.
we broke, went up there and failed. Then we went down to no, over here in
Ah,
2023.
here,
Yeah,
here,
right.
yeah,
We
yeah.
failed, went down 50%,
Hmm.
and then the ABCD failed. So it's showing some weakness, I would say,
Absolutely.
right?
I mean, right now bonds look weak, so we have to take that into account, and it fits with a stronger dollar, right? Higher interest rates, weak bonds, higher interest rate, stronger dollar. So that makes sense, and the charts are telling that to us. So let's go check out the metals. Start with gold. Here's your gold monthly. So far, we're at a inside bar,
Hmm.
but this move up, look how steep that is on a monthly basis. Would it be surprising to see it correct to the half square? Absolutely not. And that
Not
would
at
be
all.
around 25.72. That would actually be very bullish if we came down, sort of stayed on top of this, then we could, get ready for the next move up.
I mean,
I mean,
even if it got down to,
yeah, it could come
came
to
down
here.
$600, it's still it's still in great shape.
Absolutely. I mean, and this is
I mean,
this
look where
was
the
the
trend line is, right? So,
right. This is a one by one. Look how far above that we are. But this was the chart that, Barry and I kept talking about, saying, gold is frustrating everybody, but it's not bearish when it was doing all this garbage,
hmm.
because it was doing it around a full square on top of and right at the previous highs.
Yeah,
And so being up here is not bearish. We just
not anymore, not now.
no, I think we just need to burn some time,
Yeah.
and we'll see how that goes
And
with
I
with
remember these
gold
highs in the 20s, like 20, 21, 22. Everybody was also bearish gold,
right in
right?
here. Yeah.
Look what it quietly did. Came back for a flush in 23, and that was it.
I mean, one of the tells was it just couldn't get that deep of a correction. It was
Yeah.
just like chopping around here.
Hmm.
And that's pretty bullish. So that's gold. Let's check out gold's little brother.
Man, that gold chart has a great inside bar break into the upside example there.
Yeah. Here's silver. Now we have an up bar so far this month because we did make a higher high this month, but we're selling off. Again, this is not a bearish chart. The only thing is we have a little false break here, right? The last couple months we
Hmm.
have false breaks. So is it going to correct? Most likely. The correction probably started last day or two. But let's see, as long as it doesn't go very deep, I mean, right here, if you look at it, that's perfect structure with the highs from 2021. If we just go sideways here for a little bit, maybe pick up this trend line and then we can go again.
Well, your
Are we?
45 line is the main thing there. It looks like that's
Yeah,
really the
yeah.
key level.
It is a nice trend line. So, we were cautious because of the 90 weeks that came in and some other cycles that came in here. And so we're starting to get this correction. But as long as the price correction doesn't get below this full square, which is around 26.70, 26.60, you have to remain bullish
Mhm.
on a monthly basis.
And here's a case where the triangle broke to the upside, right? Perfectly.
Absolutely.
And came back for a check. It's not quite
The,
done. So,
yeah, a little check right on the full square.
mhm.
All right, let's go to the next one, which is copper. And here's what we mean by sitting on top,
Yep.
right? This big bar breaks up, next bar comes back to check it, and we sit on top. And that is so the key level from a monthly standpoint is around 440, 441. As long as we stay on top of that monthly basis, we're good. And we called out this square, I think
Mhm.
on it was either the daily or the weekly. I think it was the daily was 216 by 216. We said, hey, we're going to get some sort of
Yeah.
correction. We got the correction. Now we're pushing up and now we're stalling again. So let's see. And these commodities may be reacting to this strength in the dollar and the potential strength in the dollar that we see, right? So they're just
Mhm.
pulling back a little bit for now. On a monthly basis, this 440 is key. That's our full square. All right, let's go to the next one. And the next one is why were we bullish on crude even though, we broke this triangle. We said, okay, this could be a false break. Watch it. They're playing games here.
That's
Just look,
why.
you have a full square and look left. Look at all
Mhm.
this structure here that we were sitting on top of. We already have an up bar for the month. There was a big correction today, but again, it's right here at the previous highs of last month's highs, right?
Mhm. Yeah.
That's telling to you how the range has expanded and it's pushing. I wouldn't be surprised if we correct, if we saw the majority of the correction today and maybe we chop around a little bit and then get going again.
Where's your 1/8 line? Right under there.
1/8 is 71.
71. Okay.
Yeah, right around 71.
Mhm.
So bullish crude, very constructive on it from a bigger picture standpoint. Feel like we have good lows.
And a
That,
false break to the downside, which really builds up the story for the long term. That
Mhm.
should be a low.
Yeah.
Mhm.
So it's we try and do this every so often is take a look at these higher time frames because they do give you a perspective that sometimes you lose when you're looking at the daily or the 4 hour or the 60 minute. We get caught up in every bar as opposed to stepping back and looking at the bigger picture and bigger picture for the commodities that we reviewed is
Mhm.
very, very constructive. They've done their corrections, they're pulled back, they've either broken out and are pulling back to, good structural support levels. And that's the hallmark of a bull market. And when you want to start buying is when they make these pullbacks within a larger uptrend. That's when you can get in there again with favorable risk reward. Uh, Barry, you said we have a few minutes left. You said we wanted to talk about the cycles. So, um,
Hey Ben, while you're doing that, can I switch to another crude chart? I forgot
yeah,
to show it
sure,
during the
sure. The circle.
yeah, exactly.
Yeah. Man, that chart's beautiful.
Well, beauties can, I mean, hopefully it'll stay like that for years to come.
Yeah.
Let's see.
Ride that thing up.
With you talking about the monthly, I mean, that's when I remember we were going to look at it earlier. But anyway, just to show that one thing, the upside potential, right? We looked at this chart briefly last Friday, but I just wanted to say, 64 came up as a level, I think on your chart too.
Hmm.
And here we had 2 weeks up. We're up against this big old trend line. This is a weekly chart. And there's a little bit more leeway here to play around. But boy, once this thing breaks, you can see the curves really picking up its acceleration. So I just want to show you it's about buying at the right places, boy. This is about as lowest point as going to get. So anything, starting to trade to the long side, which we have started, this is the kind of place you want to begin, not up here when you don't know what the risk is, right? It's here, it's very, very tight. It's just starting to move out. So I just want to show that with you guys so you kind of have a vision of what the longer term looks like,
Yeah,
especially
and
based the weekly.
and as you said, the risk reward here is spectacular. I mean, it's fantastic.
Yeah. Yeah. So go on, Ben. You were talking about
So the cycles, like this week is a big week. Barry's been talking about it from a time standpoint. I wanted to mention, a few of my longer term, very important cycles are coming in this week as well. So does that mean everything V's from here? Absolutely not. As we always say with the cycles, what it does, it gives you a window where you really need to watch price, right? You watch, especially when we're at in so many markets, these critical levels. Because what happens when the cycles hit, the resolution of those levels comes. It could be a bullish resolution, it could be a bearish resolution. We
Right.
don't care. All we want to know is, okay, we failed to get on top of that level. Okay, we got to look south in that market. Or we got on top of that level and we're sitting on top of it. Okay, we got to look north and look at for longs in that market. Because when you have the cycle windows come and you have price at critical junctures in terms of, support, resistance, 90s, 45s,
Mm,
144s, that's the time when the big moves begin, right?
exactly.
When you have the price levels and the time cycles come in
Hmm.
and you get that, you wait for the resolution, right? We're not trying to predict, we're not trying to, front run here, because as you see in a lot of these charts, we are at critical support and resistance in multiple markets,
Yeah.
and it can go either way.
And that's in time, like you said, the cycles
Yep.
and in price. So, so many key markets to come together, converge in a very tightly packed window is not that often.
It
So,
does not happen often. And we always say on the show, 90s don't come around, 90 days doesn't come around every week.
mm,
90 weeks doesn't come around very often. And 90 months, 180 months, those sort of things don't come around, that often, obviously. So we are in a very important window. As long as you listen to our shows and look at our posts, we're going to talk about this. We're going to try and help make sure people stay on the right side, um, of the odds, because that's all we're trying to do is get the odds in our favor. By using the levels and using these time windows, we can really stack them to where even when we're wrong, the wrong is small. And when you're right, the right is really big when you catch these moves.
exactly. Yep.
So, anything else to add, Barry, before we close? I know we're bumping up against it now.
No, I think we covered everything. Good job on the monthlies. I think that bigger perspective is so important when there's all kinds of news and noise happening. So we're on top of that. Like you said, look, all the key markets are at the important level. So let's really stay on it. And that's it. I don't
And
think.
let's identify where the positive risk reward ratio is, and that's all this is about, is
Mm,
trying to stack those odds in our favor, and we are in a window when we can do that. So have a good rest of the week for everybody, and we'll talk to you on Friday.
all right. Very good. Talk to you then. Have a
Thanks,
great week.
Barry.
Bye bye.
Bye.